investor bearishness is too excessive. Are you taking any steps to turn investor bearishness around? That is my first question. My second question is, what other possibilities are there to boost platinum demand?
The bearishness around platinum and the often link to only Western Europe diesel is in fact incorrect. And we start with by saying that the industrial part of the business continues to grow. It's actually growing very strongly. The second thing is that as we continue to grow the market for jewelry, because the market for jewelry was grown by the PGI, it was grown by us. So we continue with that focus. So we have had a decline in China over the last couple of years. We think that that's bottoming out now. We need to put more money into China. And of course, we're trying to convince our colleagues in the platinum industry to do just that. But secondly, is we have been spending money over the last few years in India, and we're starting to see that grow. So in jewelry, there very definitely is a potential to do what we've been doing in the past, to do more of. Thirdly, in the auto catalyst part of the business, we're trying to make sure that the market understands that the Western Europe diesel is about half of that 1/3 of demand that I've spoken about. It's not 100% of the demand, it's about half of 1/3 of the demand. And that absolutely you're seeing some decline there. But the heavy duty diesel is continuing to grow, and outside of Western Europe you're seeing light duty diesel continuing to grow as well. So actually the diesel component, the auto catalyst component for platinum is not nearly as bad as it seems, and actually is starting to turn around in the next few years. Those ships that you mentioned and the trucks and all sorts of other things, they form part of heavy duty demand. And that portion of the auto catalyst business is actually increasing. The negative sentiment around platinum is overdone. But at the same time, I think it's important to see our business as a PGM business. Because yes, whilst there's negative sentiment around platinum, there's also very positive sentiment around palladium, rhodium, and the often unspoken metals, the small metals of iridium and ruthenium. The demand is incredible. We saw in ruthenium a 4-fold increase in price, and we've seen iridium grow from about $800 to about $1,200 now. Now I think it's $1,400. So I think you need to look at both of those. So absolutely, we can do lots, and we are doing lots. And this recent announcement that we've made is part of that, about growing demand. But at the same time, think of our business as a PGM business, in addition to thinking about platinum demand coming from those 3 big segments that I spoke about, not only the one small segment. And of course, it's not helping that we've got these trade wars and tariff wars, and even the effect on all metals actually over the last month. We've seen about a drop in prices, not only PGMs but also nickel and copper, of about 10 to 12%. And actually yet there's going to be almost no impact on platinum palladium. So I think that should correct in the next couple of months. Net platinum demand is made up fairly equally between industrial, auto catalysts and jewelry. In the short term, we see a strong potential for industrial demand increases, and we believe that global jewelry demand is stabilizing. It is clear that we do have headwinds from the European light-duty diesel sector. It is very interesting, though, if you had a look at the first half of this year, notwithstanding that headwinds, that with overall light-duty vehicle sales in the world up by 3.5% and gasoline sales were up by 5.3%, diesel sales in the first half of this year were up by 1%. Notwithstanding that fairly negative sentiment over the medium term, we see the demand picture as relatively stable for platinum as heavy-duty diesel starts offsetting the light-duty diesel decline. The launch of AP Ventures is an example of how we invest to support the growth of PGM technologies, but also to increase PGM demand.
We are today reporting another strong set of financial results, reflecting the quality of our portfolio, our drive towards operational excellence, and our commitment to balanced and disciplined capital allocation. In the first half, we've seen EBITDA up 70% to 6.8 billion, headline earnings up 4.5 times to 3.4 billion, return on capital employed of 22%, and moved from a net debt position to net cash of £500 million. Consistent with our dividend policy, we have declared a first half cash dividend of 1 billion. EBITDA has increased year on year from 4 billion to 6.8 billion. As we've emphasized in the past, Anglo Platinum is a PGM producer and not just a platinum producer. Today you can clearly see the importance of that emphasis, with 60% of our revenue for the first half coming from metals other than platinum. Higher dollar metal prices have added 3.6 billion to EBITDA, with higher palladium prices adding 1.8 billion, higher rhodium prices adding 1 billion, and higher ruthenium and iridium prices adding 700 million. Our strong operational performance added 600 million as a result of lower costs and increased sales volumes. We have a value-focused approach to capital allocation with very clear prioritization. Maintain asset integrity, ensure a strong balance sheet, and pay dividends to our shareholders. Our base dividend is determined on a headline earnings payout ratio of 30%, with 2 billion rands worth of dividends for the past 12 months. Discretionary capital is then allocated towards growth investments that meet our stringent value criteria, and in the event of there being excess cash, this is then returned to shareholders.